A Fed rate cut is on the cards, but how much will the market have to look forward to in 2026? Markets are on edge ahead of the Federal Reserve decision tomorrow. Traders see a 25 basis point cut as virtually certain, but the bar for the next rate cut could be higher. Fed funds futures markets see a total of about 77 basis points of easing by the end of 2026, so that's 2 more cuts next year, although bond investors are positioning for fewer. Paul Hollingsworth is head of developed markets economics at BNP Paribas 360. Paul, what sort of tone are you expecting Chair Powell to strike tomorrow?
Well, we do expect Chair Powell and the Fed to deliver the 25 basis point cut, but we think the overall tone will be a relatively hawkish cut. In other words, we expect that Powell will signal that the bar for further easing is now higher, and that this period of preemptive risk management cuts is now more or less come to a conclusion.
How much then do you expect rates to come down in the next year?
So we still expect one further cut in the first quarter of next year, and that's partly linked to the fact that we do think the economy will be going through a bit of a soft patch as we enter the first quarter. In part linked to the shutdown that, of course, has already happened. So we think that this will be temporary. But we think given the Fed is following, in our view, an imbalanced reaction function at the moment and very much placing weight on the downside risks to the labour market, we think if there is a bit of softness, that will prompt it to cut once more. But we think the bar for considerable further easing beyond that point is going to be pretty challenging because we do think it will be ultimately based on the economic data, and the fact that the Fed is now cutting into what we would consider accommodative territory for monetary policy, that should actually provide a floor for economic activity next year. So we think next year is going to be relatively resilient growth for the year as a whole and relatively elevated inflation, which doesn't justify further easing beyond that point.
There has been lots of market speculation in recent weeks about the name of the next Fed chair, but are you confident that outlook will remain similar, whoever's named, or could a Trump appointee try to push for more cuts than seem justified?
Well, our base case is that Fed policy will ultimately be decided on the economic outlook and the incoming economic data rather than the specific Fed chair. And as I've already mentioned, our view is that the economy should be relatively resilient next year, and the inflation picture also looks relatively elevated. So we think that it's hard to justify, based on the macroeconomic fundamentals, considerable further easing next year. So the way that we would expect any changes at the Fed to manifest themselves is through continued dissents and public disagreements about the outlook for policy, rather than it affecting the central case for policy itself.
Well, next week we also have rate decisions from both the ECB and the Bank of England. Let's take the ECB first. Do you see the next move there as a hike?